e-signature company DocuSign beat analyst expectations in Q2 fiscal year 2024, with revenue up 10.5% year over year, with revenue of $687.7 million. Company also expects next quarter's revenue to be around $689 million, in line with analyst estimates. Turning to earnings per share, DocuSign made a non-GAAP profit of 72 cents per share, improving from its profits of 44 cents per share in the same quarter last year. However, as you can see, price has been range-bound for the better part of the last 12 to 18 months. We have this huge monthly bias level at $38, and you have this what's resistance, support. Its resistance once again at the $63 level. Before we continue with the analysis and figure out where price is heading next, let's look at this video from CNBC where the CEO talks about their earnings.
Joining us to break down the report, DocuSign CEO Allan Thygesen. It's great to see you. You got a couple of fans, Allan, at the table here about this service in terms of changing your life. We're talking about online notaries, which, by the way, we can do that in a little bit. But really, what right now, in terms of what you see ahead and also your guidance going forward, where does this all head?
Well, first of all, we had a very solid quarter, I think exceeding guidance on all the key operating metrics. And I think that's really a reflection of the execution of the team. Very pleased with the improved pace of innovation, releasing new products more on a monthly schedule now as opposed to a previous quarterly schedule. Our go-to-market motion is getting better and better. We've always had a strong direct sales channel, but we're really ramping up our digital and self-serve efforts, and that channel grew particularly nicely this quarter. And then we have a partner channel that we're really building out and made some progress on that this quarter. So I'm pleased with the progress on the go-to-market side. Overall, I think DocuSign is well poised. We believe that the agreement space has significant growth potential and that we are the best positioned to capitalize on that as the largest company solely focused on that topic.
How concerned are you, though, about what appears to be a whole bunch of competitors, not necessarily doing it at the enterprise level that you are, but picking off sort of smaller pieces of the pie, if you will?
You never want to be dismissive or competition, and we're taking that very seriously. But I think we're holding our own. Our win rates are staying steady. We are advancing our offerings to add even more value for companies of all sizes. As you saw some of the releases this quarter. And I think as we look ahead and we think about the broader agreement space, I actually think the gap between us and folks who are providing basic e-signature will only widen. So I'm feeling very good about our competitive position. I think we made good progress on that this quarter, and we are intending to get as much business as we possibly can.
Allan, speak, though, to the macro pressures, because that's something you did warn about yesterday in terms of the overall sort of enterprise space.
Yes. Well, I think the economic outlook remains cautious. We see that particularly at the enterprise level. They also have the resources to apply more rigorous purchasing policies and so on. And so we and other enterprise software vendors are experiencing that. The good news for DocuSign is we are incredibly well diversified across industries and across size segments. So we serve customers from the very largest companies, the big banks and so on, to the very smallest. And so if things are a little tougher on one side, we can make that up elsewhere. In fact, we did see some nice growth out of the SMB segment. So overall, I think with our highly diversified book, I'm feeling good. From a macroeconomic outlook, I can't forecast that. We're running the business as if things are going to continue the way they are. That's what's embedded in our outlook.
Scrolling down to the weekly chart, let's just trace out the trend. Lower low, lower high, lower low, lower high, lower low, higher high, higher low. And right now you have price just range bound. So the chart suggests that the downward momentum is weaning and or is over. Again, price is between this band, resistance band at $64 and this monthly buyer's level at $38. What we really need to see is price break and close above this level at 64 before we can really see price reversing. Let's go down to the daily chart. And again, when it comes to momentum to the downside weaning, you can see the 200-day moving average was following price all the way down. However, like the price action, the 200-day moving average is now bottoming out, and potentially it's going to reverse going into later this year and to next year. What we need to see again is definitive prices above the 200-day moving average. We had a couple of fake outs to the upside. That's going to be the first sign that price wants to reverse. The second sign is a breach and a close above this resistance band at $64. Nevertheless, although they had great earnings and future forecasts is in line with analyst estimates, prices in the middle, and it's a no trade zone range. Again, the imbalances between buyers and sellers is at this resistance level of $64 and the monthly buyers level at $38. Thanks for watching. Subscribe. Please like the video.